Crypto is essentially the asset class of AI. Currencies are going to be exchanged essentially through whether it's a stable coin as an RWA or whether it's going to be sort of Bitcoin or Ethereum or any other kind of token. People are going to be trading these tokens through an AI agent because of the fact that you can prove it. It can have its own wallet. Which bank is even going to allow that?
Welcome aboard Gatecast, Zero to Take Off, your gateway to innovators, builders, and bold thinkers shaping the world of Web3. We're ready to take off today at Gate.com. I'm your host, Maria Wojcik, and today we're super happy to welcome here a true visionary, Yat Siu, who's building bridges between digital property, institutional adoption, and gaming at Animoca brands. Yat Siu, welcome to Gatecast. How are you doing today?
Very good. Thank you for having me.
Thank you. Thank you for coming. One of the things that I would like to start our interview with is actually you've recently compared Bitcoin to digital gold, but also while comparing also Bitcoin to digital gold, you also compared altcoins to the stock market. So from your perspective, as you're observing different institutional, does institutional capital view them as at the current market as asset to preserve value or still grow the return?
Well, I mean, I think generally speaking, when we made that comparison, we looked at what was the purposes of those particular asset classes. So Bitcoin typically, at least in a digital space, is very much a reserve asset. Right? You use it for collateral. You don't really use it. People don't really spend their Bitcoin. Even though a lot of Bitcoin maxis would like that to happen, it's not actually happening. Right? It's
They
really
hodl it.
They hodl it. And also they never spend it. Right? So you basically have the same situation as with gold. The utility for gold is very minimal, but really it is a reserve asset. And gold today sits at around $27, $26 trillion in value. But then what is it that we actually use in the world? We use the products built by the companies from the stock market. And they're the ones who are bringing people into the ecosystems. So we use Google, we use NVIDIA, we use Microsoft, we use Apple. Those companies by themselves are not larger than gold. However, combined, they are larger than gold, right? I mean, I think the S&P 500 is about 500 so is $50 trillion in size, and the entire stock market is around $128 trillion in size. Compared to gold, it's around 6 times. And we think altcoins versus Bitcoin will be the same. Because think about it, what is it that we use in crypto when we're building on chain? We're actually using altcoins. Whether we use it for gas, whether we use it for gaming, whether we use it for utility, for deepen, those are altcoins. Now, that's not to say that altcoins in and of themselves are going to be bigger than Bitcoin. That will never happen, we think. Also, we don't think, just like there are millions of companies in the world, there are going to be millions of tokens. Not every token will be big, but you will know which ones of them are important. And right now, when you think about institutions, I mean, I would argue that Ethereum and Solana have very much hit sort of the era of institutional adoption. People do understand its purpose. But when I look at Ethereum and Solana, for me, they're very similar to the early internet days, kind of like telcos. Right? They're building the infrastructure in which you can build on top. But then you look at other companies in the space that are building, for instance, like a Polymarket, right? I mean, how many people know that Polymarket is actually sort of building on blockchain? Most people don't even care about it, but it's built on Polygon, for instance, right? And so there's an infrastructure play that's happening right now. And eventually, though, those applications that essentially are owning the customers, we think will be the ones that are going to be the biggest ones. And that's the same that we see in the stock market. And we think altcoins will very much be driven in the same way. But we're early. I mean, in 2001, 2002, after the dot-com bubble, a lot of institutional investors weren't sure about internet stocks. And I think the same is true right now for altcoins. They're not sure. They see it. It's liquid. However, they're not exactly sure how to work with that. And I think this will change in just a number of years.
Talking about S&P equivalent and S&P 500 in particular, which altcoin sector do you see as S&P 500 equivalent in this case? And where do you see there is institutional lasting interest and there is utility?
Yeah, I mean, asking for the S&P 500 equivalent today is a little bit like asking in 2000 or 2001 whether Amazon or Apple
Is going to be
or Google are going to be essentially the biggest companies in the world.
okay.
Right? So I think it's a bit early to say that. But the point is that the trend line to us is very clear. Basically, the future is being built by these companies. The other problem is you don't actually know which ones are going to be the big ones. But I think the point is that the space is just evolving in such a rapid way that it's hard to know who's going to be leading in the space, which is why at Animoca Brands, we generally invest in a broad spectrum of companies that we all think are building and leading sort of programs. However, none of them are, we don't know which ones are going to be the ones that are really going to be the big one at the end of the day. I mean, how many people thought sort of Amazon was going to beat eBay, for instance, as an example, right? Or when you think about search engines, I mean, Google came late to the party. It was Yahoo, it was Magellan, it was InfoSeek, it was all those guys actually who were actually much bigger. And then at the end of the day, it was Google who basically took the crown much, much later. However, if you were invested in all of them, you only needed the one to essentially create not just all the returns in your fund, but essentially go like 1000x. That's actually sort of the strategy of Animoca. And that's essentially why we're investing so broadly as an investor and also builder in the space.
You also mentioned earlier that the hype is over. The crypto hype is over. Obviously, what matters is infrastructure. From your perspective, what are right now the biggest infrastructure gaps that might be still holding crypto back?
So when I said the hype is over, what I really meant was that the sort of general attraction as a speculative asset has essentially died down, not for the purpose of speculation. People all speculate, but in terms of the speculative asset that feels like it is the most sort of interesting, most sort of, you know, I don't know if this is a correct expression, but Bitcoin and crypto used to be both sexy and exotic, right? It was something you would see and you say, "Oh, this is kind of interesting." However, it's a sexy asset. It's kind of I don't really know, but it was also mysterious. It was not well understood, and a lot of people looked at the sort of upside of it in a very different manner. And now we have a lot of other sexy assets, such as AI token, sort of AI stocks. Energy has become sexy again, right?
Bitcoin is already
So
it's not that interesting anymore.
so Bitcoin is not as exotic anymore.
Mm.
Still sexy, but not as exotic anymore. So it's mixed in this entire pool of institutional capital as well as retail capital that no longer has a distinction. So if you're basically thinking about someone who's just looking to speculate, the difference between Bitcoin and an AI stock or even gold or silver seems the same.
Mm.
So that's the point where that sort of, let's call it, speculative sexiness has gone away in the sense that it's the same as everyone else. I mean, you think about what happened just last week or last couple of weeks, the distinction between silver and Bitcoin, and even to some extent gold, is no longer as clear, even though we in the industry understand there's a very clear distinction in terms of its sort of, basically scarcity. However, that's how most people will treat it. And also because of the fact that now, because Bitcoin is in the form of ETFs, you've got all sorts of derivatives attached to it, right? You've got the whole financial world that is now attaching itself in different ways in which you can create synthetic versions of these assets. Again, it doesn't change the scarcity of Bitcoin, but it does make it much more available and essentially much more common, as it were, right? So what does it mean? Just like the early days of the internet, it means that the true believers and adopters are going to be the ones that drive the industry forward. They're the ones who are not buying it just because they want to speculate. They're buying it because they believe in a better future. They believe in the fact that there's going to be sort of utility around these tokens. They believe that this is going to change the world for a better internet. Whatever belief that you have in this is why they're doing it, right? And I think this is basically why we think utility tokens, particularly with altcoins, are going to ultimately shine because there's a purpose for them, right? One example, for instance, when you think about what's happening in AI, right? I think a lot of people are somehow treating crypto and AI as entirely two different topics when they're in fact very much intertwined. I mean, crypto is essentially the asset class of AI. Currencies are going to be exchanged essentially through whether it's a stable coin as an RWA or whether it's going to be sort of Bitcoin or Ethereum or any other kind of token. People are going to be trading these tokens through an AI agent because of the fact that you can prove it. It can have its own wallet. For instance, think of Polymarket. Without blockchain, Polymarket couldn't have been built.
Yeah.
I mean, yes, you can build your own database, you can build, but what does it cost? You have to hire a really, really strong engineers. You have to people who understand how money flows and sort of an internal banking infrastructure. Like you have to recreate essentially a mini bank in order for you to really operate a standalone sort of prediction market.
And to know how to build it on top of Polygon as well, obviously.
Well, yeah, but building on top of Polygon makes it easy. Building on top of any blockchain makes it easy because you've got the smart contract fact that basically
When you
ensures
already have it ready.
exactly you have it ready. You've got essentially the ability to really ideate new financial constructs or products with all the security in mind without actually having to rebuild all of that. So it's like a public infrastructure. In the early days, for instance, it was hard to build a website because you had to buy a server, you had to set up somewhere in some data center, you had to configure all the IP configurations, you had to figure out routing, you had to do all that kind of stuff before you could even run a normal web server. And then came Amazon Web Services.
Mm.
And basically now you don't even care about that. You just click a button, set it up, your website's ready, and you can roll, right? And that's what blockchain basically did for financial infrastructure. I'm able to now build and compose on top of a financial infrastructure that is safe, that is secure, and then as a result, I can now build something like a prediction market that deals with real money. I mean, just think about how difficult it is normally for a private company to build a transaction layer and a, let's call it quasi custody layer that deals with real money. Extremely difficult. Tokens and blockchain essentially to the rescue, right? And of course, that means AI agents can now trade on top of these and buy stuff on top of these without having to deal with some kind of API layer. I mean, imagine if you have an AI agent that wants to transact, they have to plug into your bank account and they have to sort of get permission.
Yes.
Which bank is even going to allow that, right? And so that, again, blockchain tokenization solves that. So what we did at Animoca Minds, and this was kind of really timely because the product has been already sort of in ideation and development, but just essentially when, well, ultimately Claw, Moltbot, and then OpenClaw as it is now known, basically when that emerged, that was sort of the right time to essentially push out the product. And what it really is essentially OpenClaw, except an entire cloud version. And the difference is that it has its own wallet. It can do its own transaction. It can also plug into your calendar and do, work with Telegram and do messengers. But now I can basically tell my AI agent what to buy from an AI standpoint in terms of, maybe to trade, to do a transaction. And it's much more accessible and easier than, to go on your wallet, remember your 12 or 24 keys.
Yeah.
Even if you have a ledger, which is very, very important to hold some of your key assets, again, for most people, that is a barrier that is difficult from a mass adoption standpoint. But ultimately, the point is that it's integrated into your life. It's not to say that you're only using this AI agent to trade, just in the way that you're only going to this account to basically go and trade assets. This AI agent does everything for you. Right now, I have the AI agent that's managing sort of, schedules for my children, for instance, right?
Oh, right.
Right. It's managing it right now, right?
Which one are you using?
So no, this is our own Animoca Minds, right?
Mm.
It does it over Telegram. It's handling my travel bookings.
Everybody can use it already.
Everybody, you can sign up for it right now. AnimocaMinds.ai. You can try it out right now. It is in a
Exciting.
beta version, but you can basically, and the way you interact with it is entirely text based. So you can chat to it and say, set up a wallet, and then you can basically put money into the wallet and go do trading. It can basically also do things like, some people are actually building some cool stuff, but I'm seeing like they're basically building, especially what happened last couple of weeks, people are building essentially sort of astrological bots that are trying to tie astrology to trading, for instance, right?
Really?
Yeah, it's just kind of, wild, funny stuff, right?
Uh-huh.
And of course, people also building games with it, like text-based games, like quizzes, right? So you can see that emergence. And what it really is down to this next area of you can now innovate and create things just with things that are always in your head and always in your idea, but you don't need to have the technical skills. The problem with OpenClaw is not that OpenClaw isn't innovative. It's incredibly innovative. It opened up this whole new sector. It's the issue of complexity, right? I have to have my own box. I have to install it. And then it has access to all of my emails and all that kind of stuff. And most people we don't think are going to give access to their entire life. People probably don't want an AI to read all of their emails to know what's going on, but you wouldn't mind an assistant who can handle everything, from diet planning to life scheduling. It's particularly powerful in groups. So what you can do is you can put the AI agent together in a group of 5 or 6 or 3 or 4 people, like in my case, my family, and also in some of workspaces. And then it's, we think of AI really just as a kind of note keeper and someone who distills our information, not as a collaborator. And what agentic AI does, it becomes a real collaborator in the process because it can contribute and it can add value to the conversation. In many cases, it is a mirror of what you've said, but it's also one that can remind you of things because not everyone can have an assistant and not everyone can sort of, remember the stuff that's happening and also bring context from other external sources, right? So it's very, very powerful and really excited about where it's going.
I'm just really curious. Whenever we're talking about your agentic AI, when you're saying just you ask him to set up a wallet, which wallet does it choose? Like, or do you choose it instead of him? Like, how,
Well, I mean,
how
I
does
think
it work?
so. It sets up its own wallet, right? I mean, basically anyone
Its
can do
own-
EVM wallet,
Okay.
right? But it can't do Solana yet. It will do it very shortly. But just as a sidebar, one of the things that's now happening is that we now have to integrate essentially our Mocha ID system to make sure that the agent has an ID, because something that happened over the weekend was funny. One of my guys was essentially talking. That AI was giving an update on one of our tokens, and then it said it had a conversation with Yat Siu, and this is my input. And then he asked me separately, so did you talk to the AI? I said, I didn't talk to the AI. It turned out that someone else was making a Yat Siu agent, right? That basically mimicked who I was, and the AI couldn't tell the difference between the real me, because he doesn't know who is a real person, and the actual sort of agent that had the same name. So the agents were talking to each other, the minds, as they called, were talking to each other without really knowing who's real, who's not. And of course, to us, it seems sort of nonsensical. You should know who the real person is, but we have a visual sense, we have the history, we have some ways in which you can verify that, and AI doesn't know that. And this is exactly why sort of ID systems become much more important, because now essentially with a sort of digital ID, I can also know whether this is an agentic AI or whether this is a real AI or whether I have given permission for this AI to represent me, right? So this is something that really sort of will grow and expand in critical ways. Now, most users will not care what wallet technology you use. It doesn't matter to them, right? They just want it to be traded. They just want it to be secure, right? And in most cases, also, when the assets become sizable, you might want to move it onto a sort of cold wallet, but then they can just transfer it to the cold wallet and you can do stuff. Right now, the AI agent is giving me sort of market updates when the token hits a certain price on the DEX. So it doesn't. It's not on the centralized exchange. It can start trading and buying assets. If I wanted to sort of maintain something, it can do the same for NFTs as well, right? So it can, because it can basically sign on and essentially trade on things like OpenSea. So you can deal it with all sorts of stuff, right? It's actually quite powerful.
I would like to focus right now on AI and crypto synergy, as you mentioned before, because if you think about it, really, it's not going to exist one, let's say, AI can exist without crypto, but as we can see with more cases, more use cases, crypto is going to exist using AI. It's going to be definitely converged together. You're based in Hong Kong, and in this case, we have heard from you that, not only from you, that it is poised to be a hub for AI and crypto convergence. Why do you believe it's positioned better for this? I mean, Hong Kong than Europe or the US?
I mean, in general, when you think about, and the US will take that aside because US is always a bit of an outlier when it comes to innovation. But generally speaking, what is essentially crypto and blockchain, what it really does, because it imbues property rights into anything, it essentially gives it a financial quality, which means that you're basically turning it into a financial asset, whether you like it or not. And that means that there are forms of value that are created, there are things that you can trade, there's an asset component around this, which means any place that has a higher financial literacy rate and that is better with money or is a financial hub, as Hong Kong is, has a natural advantage. And that to me is one of the reasons why, for instance, when you look at Silicon Valley in the US, it definitely has an advantage on AI tech, but it is not a crypto hub because the Silicon Valley is not a place where people think, and I'm not saying that money is important, but the mindset about money is totally different in Silicon Valley than it is in New York. So what is the crypto hub in America? It is New York. The crypto hub in Asia, Hong Kong. What's the crypto hub in UAE, Dubai or Abu Dhabi, right? It's all financial hubs, right? And so in order for this convergence of crypto and AI to happen, and AI is ubiquitous. So I don't think of it as a specific geography per se, right? Because AI is a technology with the LLMs, they're kind of everywhere. And of course, in Hong Kong, you have the added advantage that you literally have, essentially the Western AI combined with the Eastern AI, as in China. So in some ways, Hong Kong is a perfect gateway between the two, followed by the financial knowledge. Combine all these three things, and I think you have a very powerful AI plus essentially crypto hub, right? If I take a look at a parallel of the internet companies, the titans of the ones who became the biggest internet companies are the ones who ended up owning the direct relationship with the consumer. So that's why the comparison I often give between sort of L1 and L2s is essentially telcos and ISPs. Not to say that the infrastructure is exactly the same, but you can build on Solana, you can build on Ethereum, super important infrastructure, and without them, you wouldn't be able to sort of build what we see. But the value capture is limited. The relative value capture that an L1, L2 has is the gas fees. But actually, when you think about the people building on top of it, who own the customer, they could only do so because they're building on blockchain. But the amount of value that they receive is literally 90 to 95% versus the small amount of gas fees and other things that the chain delivers. And of course, things like TVL and all these things create value because of the fact that you can put them on chain and create yield, but that yield is not generated by the chain itself, it's generated by other products that are essentially using the chain to secure it. So it's a bit different, right? And today, you look at telcos and ISPs, companies like AT&T, they're worth a lot of money, but they're not bigger than Google. They're not bigger than Apple. They're not bigger than Nvidia, right? And what do all these companies have? They have a direct relationship with the customer, and they essentially own that direct relationship end to end, and have the ability to upsell them, right? I think there's some interesting examples when you compare, for instance, Polygon versus Polymarket. Polymarket's private valuation is $8 billion, I think, possibly more, depending what happens in the future.
Yeah.
And Polygon as a blockchain is unfortunately much smaller, right? And we're early Polygon investors.
Oh, they were bigger.
Well, but it was similar to the early days of the internet. When you think about ISPs and telcos, they were the biggest companies in the mid '90s before the dot-com bubble. AOL bought Time Warner,
Yeah.
right? PSINet, Verizon, all these companies, some of them that we don't even remember, essentially were the giants of their time, right? You had the whole ISP consolidation period around '99, for instance, right? And now, basically, this infrastructure has become critical telco infrastructure. However, they are not the biggest companies in the space. And so we see the same sort of evolution happening.
Right.
So, assuming clarity passes, which is a different topic altogether,
Yeah.
we should expect to see many, many large to medium sized companies all basically execute on their tokenization plans.
Okay.
Because one of the struggles that you have if you're a large company is that you don't want to launch a token with regulatory uncertainty, right? I mean, the question a lot of people have is, okay, Trump's great for crypto. What happens if he's no longer president? What happens if the administration changes? What happens if, essentially, the White House or the Senate or Congress essentially becomes sort of, less Republican or not Republican dominated at all, for instance, right? And while you could argue that, crypto has become much more bipartisan, so I don't think crypto is gone. I don't think there's a risk for that. But certain regulatory framings will be challenged when you have a different administration. And the point about the Clarity Act is that it makes certain things in law that makes it very clear what is a commodity under the CFTC and what is a security under SEC. And under the way that it's constructed, that clarity, no pun intended, of course, makes it very easy for a company to say, okay, now I can launch a token. Right? Because what we've seen in the previous regime is that even if you launch a token without the regulatory clarity, someone else can just come up and say, well, I think that looks more like a security. Says who? Let's figure it out in court. And then the problem is that after you spend millions and millions of dollars, you will have created such a sort of, negative incentive to even try. Why bother? Plus the negative media and all that kind of stuff. You wouldn't even go there, right? So when it's something legal, you can't even challenge it on that basis. And it also allows essentially companies to say, okay, this is my framing, so I'm safe and secure. And so even if it's just an experiment, you're willing to experiment because essentially you've removed a lot of the other areas of uncertainty. So we think that's going to be a big one. And of course, if America does something, the rest of the world will typically follow, right? Now, the Clarity Act is a little bit wobbly at the moment. But even if Clarity doesn't pass in its current format, the SEC certainly has certain powers and will probably use these next couple of years to create essentially some kind of guidances or rule setting as well. And so a combination of Clarity and what the SEC will do will help shape that industry going forward. We are certainly hopeful and believers that Clarity will pass. But right now, there's obviously a little bit of drama around that.
Yeah. You've actually suggested that once RWAs are tokenized, it could reach around $30 trillion. Apart from real estate, which other asset do you believe is going to be tokenized at scale at once?
I mean, the one sort of asset class that most people in finance are excited about is essentially all the financial products,
Okay.
right? I mean, when you think about, for instance, what's happening with, basically HELOCs, right? And, you've got also things that are happening about sort of tokenizing yield assets. People talking about tokenizing music royalties and film royalties, for instance, right? So you have all sorts of new asset classes developing. I'm most excited about the new asset classes because these are areas that people would like to purchase but cannot, like the Stradivarius example. However, the one other area that is very valuable when you sort of tokenize a bond or mutual fund, for instance, is that you can now reach new audiences to buy that at scale, because tokenization over blockchain makes the cost essentially of delivery significantly lower. So if I was to spend, for instance, I think at Davos, we had a panel with Jenny from Franklin Templeton, and she was sharing her experience that she has to charge essentially $500 for a fund product because it costs several dollars just to do the transaction. And when by using blockchain, the entire cost of the transaction of a couple dollars was over a 6-month period or something like that, right? The point being is that now she can sell the same product for just $20 or even less. So most people, perhaps you who have money, are like $500 is not that much money. $500 is a lot of money. If you're a student, if you're in a country like in Southeast Asia where your income isn't very high, You'd love to buy a structured product that actually has very safe yield or good income, but you can't afford $500. In some places, $500 is your monthly salary. In some places, $500 is your annual salary, right? But if I could do it for $5 or $10 or $15, now I have potential access. And with blockchain, we can even get it down to $1. Now, if you're the issuer, that's actually something that you like, because now I have a new audience of millions of new customers who might buy my product at $1, $5, $10, $20 clips instead of going for a certain class of customers who can basically only who can pay $500 or more. And this to me is this whole concept of financial inclusion, which is sort of the big opportunity here, because this is about a more democratic asset to financial sort of assets, as you had mentioned. But it's not only that you have access to it; it's also the cost. It's the cost is prohibitive when we use essentially TradFi rails, and essentially blockchain can solve that. So I think the RWA area in that area is very exciting.
Let's finish it off with the lightning round. Are you
Sure,
ready?
sure, let's go.
Okay. True or false? By 2030, an altcoin overtakes Bitcoin in market cap. Any altcoin.
False.
Okay. One jurisdiction you believe will set the global benchmark for regulation.
Probably the US.
Not UAE.
UAE has, okay, maybe to clarify, UAE is showing the way forward, but the rest of the world doesn't necessarily follow UAE. The rest of the world follows the US.
True or false? Stablecoins will dominate cross-border settlements in 5 years.
True.
One altcoin sector institutions will adopt first. DeFi, gaming, or RWAs.
RWAs.
True or false? AI agents will autonomously transact on chain as economic participants.
True.
You're already using one.
Yes.
Yeah. True or false? By next cycle, NFTs will be a recognized asset class.
I would say in many cases it already is, so I would say it's true.
Okay. One key metric you watch to gauge altcoin utility.
Usage.
True or false? By 2030, traditional game studios will tokenize assets by default.
True.
One underestimated risk to tokenization at scale.
One underestimated risk?
Yes, today.
Extreme speculation.
And one less funny one. If Gatecast is our airline and Web3 is the destination, what's the perfect in-flight movie we would be watching right now?
I don't know about the movie, but I would say bumpy weather ahead.
Oh, amazing. Thank you so much. Thank you so much, Yat Siu. It's a plentiful, you've shared with us plenty of really, really, really amazing insights. As we bring Gatecast Zero to Takeoff flight to a close, thank you so much for watching. I'm your host, Maria Wojcik. Thank you for watching, and we'll be ready for the next takeoff in the next episode.